Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, October 7th. Okay, I'm going to keep this video fairly brief and just do a quick rundown on the index charts this morning. If you missed it last night, or if you're new to the site listening for the first time, I did a more in-depth review last night on the market recap where I went through the indexes, all the FANG names, gold and silver, plus several other names of interest. If you missed that video and you'd like a lot more detail, I've put a link in the blog for you to be able to jump over and listen to that if that's your preference. But just reviewing this morning, futures have lifted a little bit as President Trump is now tweeting potential a la carte deals for stimulus. I don't know where that's going to go. I don't know, what lasting effect that may have. But let's just look at the price action because that's what we've got to trade anyways. So we've got a little lift this morning. We'll find out what happens when the big boys step on the field at 9:30, what they want to do. But anyways, on the 2-hour chart, just quickly recapping, we got rejected at the top of the range with a big impulsive bar. By my work, we fell a few pennies short of filling this gap. We may get a little bounce this morning, may create some bear flagging action, but I've noted that the key level is the daily 50 EMA that comes in, let's call it 332, and that aligns perfectly well with the top of this lower gap that spans from 332 down to 329. That would be a place where bulls would certainly want to hold the line, holding the daily 50 EMA. If they lose that, then it would favor price coming back in and filling this gap to 329. And then, of course, if that were to fail, back down here to 322. If price recaptures this 326, and we're operating, up in this area, I just assume it's going to be a lot of choppy action in there. Anything short of breaking out above 341.50 is just going to be, choppy, vol, noise, whatever you want to call it. I don't think there's anything really of significance in between 336 and 341. If you were to get long on the recapture of 336, that's fine. If you want to see if get a push up here towards the top of the range again, that's fine. But I think if I had to favor lower or higher, I think I would have to favor lower. That doesn't mean it can't bounce first and then come down, but that would be my bias for today. SPY 30-minute view. You can see here, this is the open gap from 2 days ago, right down to 334. If that fails, I would expect down here to 332 as we just discussed in this $3 gap. So these are your bounce levels. And then, these 336, 337, 338 are all levels to recapture on the way back up. So I think there's some very good, well-defined levels that if you're an active trader, you can certainly trade against, both on the long side and the short side, if that's your thing. As far as swing trading, we're back in the chop. We're back in this big trading range that we've been in for weeks. So I think from that standpoint, it's tough to get a good trade location right here. Now, if we were to come down in the days ahead and get down in this lower range, then yeah, we might have a nice place to get a swing long towards the bottom of the range. And assuming that support holds, I think we could have a good long setup like we did over here. But as it stands now, right at the top, no, I don't think you can really do anything significant on the long side unless we break out above 341. Let's move on to the Qs quickly. The daily EMA comes in at 272, right here at the bottom of this gap. So from a technical standpoint, even if you're a bull, come down, take care of unfinished business, close this gap, hold at the 50, then bounce. That would be a nice outcome for bulls. Then there's no reason to come back for this unfilled gap. So key off of 274 today. If price breaks below 274, I think that's a line you can get short against. And then look for this gap fill. I would be covering at 272 at the 50 and then take it from there. Then if 272 breaks, you're coming down to 268. So those are three distinct levels on the downside. 274, 272 where the 50 comes in, and then the lower target would be 268. On the upside, recapturing 277 would be a positive, and then 280 on the top. Let's look at the 30-minute chart. It's a little clearer. Here's your levels, 274 and 272 with the 50. Here's your 268. If you were to recapture 277, that could be, a decent level to try along for a push up towards 279, 280. So, in my mind, everything kind of hinges off of 274. I know futures have lifted a little bit. We're probably, right in this 276 area right at the moment, but it's 2 hours before the open, so a lot can happen in that period of time. So just kind of see where price opens at 9:30 and then take it from there. IWM got rejected at the top of the range here at 160 and has come down. On the 2-hour chart, I think as long as price holds 155, the bulls will remain in control. But break below that, lose this uptrend line, then I think you got a pretty fast move towards 150. Not a lot of structural support in here. So I didn't mark it on the chart, but the 50 EMA comes in at 150. So we did get pretty far away from that level compared to the other indexes on this quick run. So key off of 155. As long as 155 holds, I think you could get a bounce. If it fails, though, that's a great risk-reward setup to be short against 155 because you've got potentially $5 of downside and your stop can be placed right above 155. So that's what I'll be doing if 155 breaks. I think that's a nice setup. And remember, this rip was predicated on stimulus and rising rates. That's why the banks did better. That's why some of these smaller, mid-sized cyclical names have been running. And it remains to be seen if this index can hold those gains when stimulus appears to be off the table, at least for now. So, but we'll see. Let's take a quick look at the 30-minute chart. And here you basically see the same thing. We've got a gap here between 154.50 and 153. That would be a logical first objective for any bear market corrective action, to come down here, break 155, and then fill this gap and take it from there. So that's what I would be looking for on the downside. I think the upside, at least, near term, is probably limited, but nothing wrong if you see this, 156 level hold. There's no real harm in being long and looking for a bounce. Today, you might get a $2 bounce, something like that. We'll just have to wait and see. So that was just a little quick recap of where we are on the indexes. We spent a lot more time on it last night. If you listen to that video, so I haven't really covered any new ground this morning. But for first-time listeners, or just as a quick refresh, that's where we're at. Do a lot of focusing in on your levels today. Remember, we're only a tweet or two away from a rip or a dip. We're in a news-driven, event-driven, higher volatility environment. So trade accordingly with your size. I don't think there's any reason to, go off the deep end with any kind of large position when, you can see what happened yesterday. If you got, anybody that got caught, piling in long for the sure thing breakout, they got hurt yesterday because that happened so fast. You blink 3 times and it's gone. So, keep your head on a swivel, trade light, stay within your comfort zone. No need to, go off the deep end on sizing. I did want to mention also, gold and silver are getting whacked this morning. I think I saw gold down like $20 and silver down a few percent. So let's keep our eye on that. Let's keep our eye on dollar strength and bond yields. I think those are going to be important things today to keep an eye on, even if you're not trading them. If you see bond yields fall, meaning TLT go up, and you see dollar strength, those are going to be headwinds. And of course the opposite, if you see bond yields rising and the dollar falling, those will be tailwinds for the market today. All right, let's wrap it up there. I really appreciate your time this morning. I will be touching base midday with any observations, and I'm going to do some more chart hunting this morning to line up some potential setups that we may want to take depending on which way the market breaks going forward. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.